Studio microphone, ladies and gentlemen. Welcome to today's breaking coverage. For weeks, speculation across social media platforms has been building. Rumors that the Iraqi dinar is on the verge of a sudden revaluation. Headlines in forums, YouTube channels, and chat groups claim the currency is about to skyrocket, restoring pre-war values and creating overnight millionaires. But when we cut through the noise, the data tells a different story. The Iraqi dinar, in reality, remains steady at around 1,310 per US dollar, showing no signs of the dramatic shift so many are predicting. Bar chart, the current exchange rate reality. Official Central Bank of Iraq rate, 1,310 IQD per USD. Parallel/black market rate, fluctuating between 1,320 and 1,350 IQD, depending on supply and demand. Stability trend. Over the past months, the dinar has moved within a very tight range, proving that the central bank's interventions are keeping the market under control. In other words, there is no confirmed evidence of a sudden shift, and certainly no signal of a massive revaluation. Lightbulb: why do revaluation rumors persist? The idea of a dinar RV has been circulating for more than 2 decades. It appeals to the dream of turning a small investment into life-changing wealth. Speculators push the theory for profit. Dinar dealers encourage it to sell more notes. Social media influencers amplify it because it attracts views. But despite the hype, Iraq's financial authorities have never confirmed plans for a sudden RV. In fact, officials repeatedly stress that the only path forward is gradual reform. Central Bank of Iraq, the real strategy. Instead of preparing for an RV, the CBI is focused on reducing cash circulation to fight inflation, tightening controls on dollar smuggling and illegal transfers, shifting toward digital payments to reduce dependency on physical notes, building reserves, now estimated at over $100 billion, to protect the currency. This careful, technical approach ensures stability over shock. Globe showing Europe-Africa why an overnight RV is economically impossible. Let's break it down. Iraq has around 100 trillion dinar in circulation. If the dinar suddenly revalued to $1 per dinar, Iraq would need 100 trillion US dollars in reserves to back it. In reality, Iraq holds closer to $100 billion. That's a 1,000x gap. The math simply doesn't work. Instead, Iraq's goal is slow appreciation, small, controlled adjustments that reflect economic growth, not fantasy leaps. Crystal ball, the realistic outlook. Experts suggest the dinar may strengthen slightly if reforms deepen, oil prices remain high, and reserves increase. Possible moves could bring the rate closer to 1,250 to 1,200 per USD over the next few years. But a sudden RV, jumping to $1 or more per dinar, is not on the table. Warning: the risks of believing rumors. Many small investors have lost savings by buying into RV hype. Online scams use the RV story to lure people into buying collector's currency packages. False speculation distracts from the real, slower progress happening inside Iraq's economy. Studio microphone, closing words. Ladies and gentlemen, here's the reality check. The Iraqi dinar is stable, steady, and carefully managed. The Central Bank of Iraq has no intention of a sudden revaluation. What we're seeing instead is discipline, slow reform, and long-term planning. For investors and citizens alike, the best path is to watch the real numbers, not the rumors. Because when it comes to currencies, facts and economics always outweigh speculation. Iraqi dinar remains stable at around 1,310 per US dollar, despite ongoing social media speculation of a sudden revaluation. In this segment, we're diving deeper into why these rumors persist, the underlying economic realities, and what this means for investors and citizens alike. Pushpin 1. The origin of revaluation rumors. The notion of a sudden dinar RV has circulated for nearly 2 decades. Post-2003 currency reform. After Iraq replaced Saddam-era notes with new dinars, investors began believing that Iraq would restore its pre-war exchange rate, creating massive gains for early holders. Social media amplification. Today, platforms like Telegram, YouTube, and specialized forums allow rumors to spread rapidly, often without fact-checking. Speculator profit motive. Currency resellers and dinar gurus benefit financially when they hype potential revaluation. Despite these stories, official authorities have repeatedly denied any plans for a dramatic revaluation, emphasizing stability and gradual reform. Chart increasing with yen too. Exchange rate data shows stability. Current data reinforces the reality. Official CBI rate. $1 is almost equal to 1,310 IQD. Parallel market rate. 1,320 to 1,350 IQD, varying by region and demand. Trend. Stable, small fluctuations, no explosive movement. This stability indicates that no dramatic shift is imminent, contrary to rumor-driven hype. Bank 3. Central Bank of Iraq strategy. The CBI is focused on long-term stability, not sudden RV. Reducing cash circulation by cutting excess notes to control inflation. Enhancing digital payments to decrease dependence on physical cash and the US dollar. Monitoring dollar flows and enforcing banking compliance to prevent smuggling. Building reserves, now around $100 billion, to safeguard the currency. These measures prioritize economic control and confidence, not overnight currency jumps. Globe showing Europe-Africa 4. Why an overnight revaluation is impossible. Economically, a sudden RV would require reserves exceeding $100 trillion to back 100 plus trillion IQD in circulation if 1 IQD equals $1. Current reserves are $100 billion. A massive gap. Iraq's economy is oil-dependent, 90% of revenue, lacks diversification, and faces structural challenges like corruption. Even a small revaluation to 10 cents per IQD would be unrealistic given current reserves and economic structure. Magnifying glass tilted right 5. The black market effect. Parallel market rates reflect real supply-demand dynamics. The black market remains slightly weaker than the official rate, showing no anticipation of sudden RV. Traders, importers, and citizens experience pressure from dollar scarcity and inflation, but not sudden gains from revaluation. This proves that rumors are not aligned with economic reality. Light bulb 6. Lessons from other currencies. Comparisons often mislead. Kuwaiti dinar. Strong due to small population, massive oil reserves, and long-term stability. Vietnamese dong. Reforms have only led to slow, gradual adjustments, not overnight RV. Zimbabwe dollar. Overprinting without backing led to collapse. A cautionary tale for rapid speculation. Iraq's situation is closer to a developing economy with high risk if it attempts unrealistic currency jumps. Warning 7. Risks of believing RV rumors. Many investors buy dinar notes hoping for massive profits, often losing money. Online scams exploit hype for financial gain. False expectations distract from observing real indicators like reforms, inflation, and CBI policies. Crystal ball 8. Realistic outlook. Experts predict gradual appreciation over time if reforms succeed. Possible movement from 1,310, 1,250 IQD. Digital banking and regional trade improvements may strengthen the currency slowly. Sudden revaluation remains impossible without massive structural and fiscal changes. Studio microphone, closing statement. Ladies and gentlemen, the reality is clear. Despite social media speculation, the Iraqi dinar is stable at 1,310 IQD per US dollar. There is no evidence of a sudden revaluation. The central bank's strategy focuses on stability, measured reforms, and economic confidence. Patience and realistic expectations are the best guidance for investors and citizens. In currency markets, facts and math always outweigh rumors.